Adam, what's the most common thing our manufacturers are missing? Like, what is the one area of the tax laws that are currently in place that people just don't catch in a timely manner?
If you look at manufacturers, so manufacturers that have under roughly 30 million in gross receipts, they're eligible to use the cash basis. Now that 30 million is that number's give or take a little bit, but they're eligible to use the cash method of accounting. Well, that can be very advantageous for a manufacturer because now they don't have to pay tax on their AR until it's collected. On the other hand, they can't deduct their accrued expenses, accounts payable till they're paid, but usually you will see a deferral. So that's for your manufacturers, under roughly 30 million in gross receipts. I think method of accounting is something we see a lot. Are they using the method of accounting that's most advantageous from a tax standpoint? I think LIFO. LIFO is one of those things that it can be a great tax deferral tool, and sometimes you may talk to a client about LIFO and it's, well, hey, the savings this year are only going to be so much. But what you find with LIFO, and we've seen a lot of this, is over a 20-30 year period, that LIFO reserve will build up, assuming prices increase, which I think is
there's a good track record there.
There's a good track record there, and the LIFO reserve can really build up. So I think LIFO, choice of accounting method. I think tax credits that are available out there. So work opportunity tax credit is one that manufacturers can take advantage of.
Well, and the credit that's been out there forever that I think is somewhat misunderstood is R&D, because people think of R&D, they think of guys in lab coats with chemistry sets, but that's not necessarily R&D. There's a lot of things that fit R&D under the tax code that most people don't know.
That's exactly right. Let's say, we've seen R&D with a distributor that has developed some proprietary packaging. You look at that, you may not initially think that that's R&D, but that was R&D. So that's just an example of a type of manufacturing distribution activity that can qualify for the R&D credit.
The talk about tax efficiencies makes me think about site selection and finding efficiencies there. There's a lot of incentives to work with local, county, state governments that will give you incentives for moving to a certain area, and you may receive credits on your utility bills just for moving to one certain area, or an opportunity tax credit for moving to another certain area. So it's definitely something to think about as you look to expand your operations or move your operations, which for manufacturers, they're usually not moving any of the equipment. It doesn't transfer too well. But as you look to expand your operations, to look at those incentives and see if there can be efficiencies gained there.
Absolutely.